Well, howdy, dear listeners. My name's Lachlan Hammett. I'm from Team Infinity. And, you're not here to listen to me. You're here to listen to the delightful and
Oh, thank you.
insightful Dr. Andrew Wilson. How are you today, Doc?
Yeah, I'm delightful and insightful. So thank you very much for that, Lachlan. And
No, that's all right.
I'm blushing a little bit, but no, that's fine. That's good. And here we are again, another weekly podcast, the Wilson Weekly, as we call it. And thank you to Infinity for being my partner in this show. It's been going for quite some time now, and we're all about bringing you the latest insights into the housing market. And of course, that widely brings us into what's happening in the economy, because that's all part of the story. So lots of news this week. We, of course, following up what happened the previous week with interest rates. Still a lot of buzz around the future for interest rates, and I'm not so sure we should be taking a lot of notice of all that sort of clickbait that we are bombarded with in regard to where interest rates are going. But certainly our housing markets keep on keeping on. It is the middle of winter. Well, it's getting towards the end of winter, really.
Almost springtime, Doc.
Almost spring. And we're going to talk about that, Lachlan. Yeah, the good old spring selling season, which is pretty big everywhere except perhaps Brisbane doesn't really have a spring selling season. It has a selling season all the way through the year. But it is that time of the year now where we start to look for those early signs of increased buyer and seller activity, which does lead us into the spring selling season, which, of course, we're, 2 weeks away from spring? Yes, just 2 weeks.
Oh, God, I can't wait. Yeah.
Yes. And it's getting a little warmer. I'm in Melbourne and at the moment, and we've got 21 degrees, fine and sunny here today. It was 20, fine and sunny yesterday. So all those in the northern capitals, Sydney, Brisbane, Gold Coast, sorry guys, I think you're suffering a little bit up there.
Absolutely bucketing down here.
Yeah, but these things change, as we know, and it'll be back to cold and wet in Melbourne next week, I believe, and sunny and fine in Sydney, Brisbane, and the Gold Coast. I think that it's going to be 26 degrees this Saturday on the Gold Coast, and I will be up there. Not so sure I'll have a swim, but it'll be very tempting. So we are moving into I guess the meaty part of the year in terms of buyer and seller activity, although autumn has been very strong. The markets are still holding up quite well. A bit of a fragmented market environment, which is what we discussed last week. You know, the big three, I guess we could call them, Adelaide, Brisbane and Perth, are still keeping on. Melbourne just sort of going sideways a little bit. Sydney rising, but not at the rate it has recently. But this week we're going to talk about some other things, and we'll finish off looking at those latest auction clearance rates, which do give us a real-time insight into what's happening in our housing markets. And I think we've got just some really early signs of spring with our auction results from last weekend. So shall we get going, Lachlan?
Absolutely, Doc. I'm greatly looking forward to it, mate.
Yeah, okay, beautiful. So let's go. My housing market is my brand. As I said, I work with Infinity on the podcast here. And we're all about the current state and future prospects of housing markets, particularly the current state. And that's why we bring you these weekly updates so we can really get a real-time feel for what is happening in our housing markets. And if you are making decisions on property, you obviously want to know what's happening here and now and where before you make those decisions. And there's a lot of stuff that floats around in the marketplace, in the media, which is, misinformation, disinformation, whatever. But we certainly try to keep it quite objective here, and it's data-based. And I've got a new little saying, Lachlan: the first brick in that wisdom wall is data, and all those other bricks, as you build the wall, it's experience and knowledge and information, and that gives us the wisdom to make our decisions, hopefully. So let's build the data wall today.
And Doc, you've got a lot of wisdom and knowledge here.
With some data bricks, so that sounds pretty cool,
Absolutely.
doesn't it? So it is the week to Wednesday, August the 14th, right in the middle of the last month of winter. So what's happened the week to Wednesday, the 14th, and we're going to look at rents. Of course, rents have been a big topic of discussion when we're talking about the housing market over the last couple of years, because basically, Lachlan, we've run out of rental properties, and that's meant that we've seen a skyrocketing rents, record low vacancy rates, maybe just starting to see some signs that we're getting a bit more balance in the rental market, but still very much in favour of landlords. But just some early signs of an improvement there from the tenant's perspective. Still a very, very tight markets across the board, and it may be due to seasonal sort of factors, winter factors, where we can get less demand for rental properties because of holidays, etc. So we'll have a look at that. And we've also had the latest home loan data from the ABS. So we'll just have a look at how home lending's going. Another good forward indicator of what's happening in the housing market, or it validates what's happening with other measures such as prices, that home loan data. So I'll have a look at what's happening in terms of home lending. And of course, we'll finish off looking at the latest weekend auction results. And do we have some signs, some early signs of the spring selling season? Just a quick tip. Yes, I think we do, but we'll wait for that at the end of the big finish. So well, let's start off with our home rental markets. And they are starting to show those, as I said, some early signs of easing. So they continue to ease after what was also a weaker month, if we could call it that, over June. They continue to ease over July. Vacancy rates for houses and units continue to sort of maintain that upward bias generally that we've seen over recent months, but results were mixed between capitals, what we expect. Rents for houses, unfortunately, despite some easing in vacancy rates, continue to rise, but unit rental growth has declined with those higher vacancy rates. As I said, is this a seasonal thing, or is it a sign that we're getting some rebalance in our rental markets? Now, we've got to understand that it's not just purely a supply and demand environment. Well, it is, but there can be other factors other than build more houses or have more rental properties to solve this issue. And what happens is, of course, when prospective tenants are struggling to get into the rental market, they're facing 20, 30 competitors for each property, just about, in most of the capitals. They have to make choices, that are not necessarily about securing a rental property. And some of those choices could be, I'm going to stay at home longer with mum and dad. I'm going to stay where I am for longer. I'm going to share a rental property with my siblings or my friends. I'm going to get a unit rather than a house, or I'm going to have to get a smaller house rather than a larger house, or I'm going to have to get a one-bedroom unit, not a two-bedroom unit, these sort of decisions, or I'm going to have to move to an outer suburb or even a regional area. So that's how tight our rental markets are, that these sort of decisions are being made, social change, and that can help, obviously, to reduce demand. It's still not creating anywhere near a satisfactory environment for those looking to rent a property. But that's what happens when we've seen this extraordinary increase in rents and this extraordinary competition for rental properties over the last 2 years. So some early signs. Let's have a look at those signs and go through each of the capitals. Sydney house rents were flat, but still at that record high level of $820 a week. So these are median weekly asking rents. So these are asking rents over July. 820 for Sydney. Melbourne, 620 a week. Melbourne was up 2.9% over the month. The Melbourne rental market, after being really down near the lower end in terms of the rent, has certainly predictably picked up, particularly with higher levels of migration over the past, or this year so far. And it's now, I guess, normalising to some degree and following the path of those other capitals. So big rise in rents again over the month in Melbourne, up 2.9%. Brisbane a little easier, down 1.2%. Adelaide up 1.2%. Perth up 0.7%, so basically flat. Hobart up 1.1%. Darwin, which is a volatile market, a smaller volatile market, down 6%. And Canberra was flat. So a mixed result there, but generally, higher rents over the month for the capitals for houses. But if we look over the past year, we can see that growth 6.8% over the past year in Sydney for house rents. Melbourne up 9.3%. Strong performance, as I said, a reviving Melbourne market. Brisbane up 9.9%. Strong across the board in every part of the housing market in Brisbane. Adelaide up 7.5%. Perth, which is the strongest housing market, capital city housing market in the country across the board, prices and rents, 12.5% increase in Perth rents. Hobart up 1.1%. That's certainly been a softer market generally. Darwin, despite falling 6% over the month, is still up 3.5% over the year. And Canberra up 1.5%. Certainly the major capital cities have all recorded very strong rental growth over the past year for houses. You can see vacancy rates are now climbing above 1% for houses. They were in those ridiculously low 0 point something levels for some time. But as I said, vacancy rates are on the rise, still very low, still very much in favour of landlords, and still creating upward pressure on rents. And as I said, perhaps we've got some seasonal factors that are just starting to push those vacancy rates up. But these are very low rates still. You've got to understand, Lachlan, that around about 2% is the balancing vacancy rate. So that's where we see sort of neutral growth in rents around about 2% plus. We're still not there anywhere except Canberra, which has 2.2%. So, and these vacancy rates are now just over 1%. So they're still quite low, despite the easing over the past couple of months, which, as I said, is good news. Perhaps that there's not as much competition for rental properties, but that doesn't mean there's still not plenty of competition for rental properties out there. When we look at units, a bit softer for rental growth over the month for units. Vacancy rates for units are higher than houses. We've sort of seen that. Sydney down 1.3% over the month. Its median rent $7.45. Melbourne easing by 0.4%. Brisbane down 0.8%. Adelaide up 1%. These are for units, of course. Perth easing 0.4%. Hobart also down 0.3%. That volatile Darwin market up 8.8% over the month. And Canberra steady. So a little bit of better news there for unit rentals. Certainly a downward path in rents over July compared to June. And when we look over the past year, we can see a bit more of improved performance given those lower rents over the month. When we look at the yearly results, Sydney unit rents up 3.5 over the year, Melbourne up 5.3, Brisbane up 4.6, Adelaide up 12.2, and Perth up 12.7. Now they're smaller unit markets, Adelaide and Perth, so we tend to have more volatile results. But nonetheless, we're still seeing those higher annual rent increases, but certainly not at the levels we've been used to recently. So once again, some better news for tenants there, and the annual growth rate has certainly eased. And vacancy rates, you can see there are certainly higher for houses than we have for units. They're still in the ones, but pushing up into the sort of the higher ones rather than the lower ones that we see in houses. So as I said, the vacancy rate issues with the higher vacancy rates generally over the month translating into lower rents. So some better news there in terms of the rental market. But once again, let's take this with a grain of salt and wait until we get back to a more normalised post-winter market just to see if these improvements can hold up and it's not just less demand because of the winter distractions that we typically see. So just summarising, home rental markets have continued to ease over midwinter, reflecting perhaps those typically reduced seasonal demand factors. Markets may be now moving towards a better balance between supply and demand overall, higher vacancy rates, not a strong rental growth, but despite all that migration and continuing low home building. But the coming months will confirm that. But it's still very much a landlord's market generally at the moment, but not quite as severe as we have seen with that sort of rental crisis, which characterises rental crisis everywhere over the last year or so. So fingers crossed that continues. Although, as I said, we're still certainly in a landlord's favouring environment in the rental market. If you want to get a copy of that, it's actually the July report, not the June report. There's the QR code for the July rent report. We'll fix that graphic up. So that's the rents for this month. They're interesting that we can watch out whether we continue to see that trend next month. So keep a watch out for our August rent report, which will be out in a couple of weeks when we get to the finish of August. So let's have a look at home loans. Still on the rise, home loans. Tracked back a little bit the previous month, but certainly the overall trend's been more positive for housing finance. No surprise, because we have seen, of course, prices rising and increased demand in our rental markets. Of course, higher prices add to that rising factor because you've got to borrow more. Of course, prices are higher, but generally you can see that trend on the rise after a bit of a slip over the previous month. Seasonally adjusted home loans picked up by 1.2%. We can see the breakdown there between first home buyers, owner occupiers and investors. Owner occupiers just were sort of moved sideways a bit over the month. Investors were higher and also first home buyers were higher, but investors have been the real story of home lending, the home lending markets over the last year. They've been quite strong. No surprise, investors are interested in getting into the housing market with high rents, higher yields and higher prices, all balancing out, as I said, for those sort of consolidated higher yields. And after a period of weaker activity from investors due really to some constraints on finance from banks, which was really, who can understand why that happened? But anyway, that's banks for you. But they're certainly back in town now, investor activity, and also first home buyers have been picking up, and that's no surprise, Lachlan, because if you can buy a house, why wouldn't you? With such a tight rental market, and it's tough to get into the market, not just through, and prices are rising, so that's more incentive as well, and also higher inflation means it's tougher to save that deposit. So lots of incentive there for first home buyers, and we've seen an improvement in that in activity from that group, also in line with what's happening with investors. We have to take some of this ABS data with a little bit of a grain of salt because it has been up and down. The ABS has admitted that they're having some issues or have had some issues with their home lending data. They have, changed some of the methodology over the last year or so. But still, I think it clearly reflects what we're seeing from other measures of the housing market, and that's rising activity. So if we look at the breakdowns over the month, investors were the top performers, up by 3.2%. Owner occupiers were flat, basically, as I mentioned, and first home buyers up 1.8%. If we look at the year-to-date comparisons, you can just see how strong investors have been, up by nearly 30% over the year, over the 6 months to June, compared to the same period last year. First home buyers up 15.5%, overall owner occupiers 11.7%, and strong results with the year-on-year comparisons. That's the financial year this year compared to the previous financial year. Investors, rocketing ahead, up by 17.4%, and first home buyers up 3.2%. If we look at the breakdowns for each of the states over the year and over the month, we can see there that New South Wales was the best performer over the month, up by 2.5%. So these are total home loans. But Western Australia, that booming market, no surprise, has been the best performer for the year to date compared to the same 6-month period last year, up by 33.9%. So, obviously lots of lending going on for Western Australian home buyers, and we know that correlates with all those, the very strong prices growth we're continuing to see in that Perth housing market, and other strong markets such as South Australia and Queensland, which have recorded strong growth. They've also had prices growth, have had strong results for home lending. But across the board, all the states have reported significant growth over the first 6 months of this year compared to the same period last year. So when we look at the performance in terms of the breakdown between owner occupiers and investors, again, it's interesting, isn't it? Given that strong capital growth that we're seeing out of Perth, that investors have really surged over this year, over the first 6 months of this year compared to last year. Also, Queensland and South Australia are seeing very strong investor activity, reflecting that strong prices growth, of course. New South Wales also up and Victoria up as well. So it's really an investor's market in terms of home lending, and we shouldn't be surprised at that given how tight rental markets have been, upward pressure on rents, and we're still seeing prices growth and booming prices growth continuing in Perth, Adelaide and Brisbane. So we get that reflection with the home loan data. So that's our summary for home lending for the month of June. I think it's interesting stuff there. It certainly reflects I guess it's a boom in investor lending out there. And I guess those that are, contemplating getting involved in property investment, at least the market's telling you that there's plenty of enthusiasm out there for that at the moment. And as I said, there's probably no surprise given how strong the market dynamics are and have been and continue to be, that are attracting, big numbers of investors into the marketplace. And not just in the boom markets, but also in the markets that aren't going quite so strong, such as Victoria, and still quite solid results happening in New South Wales in that Sydney market. So let's have a look at the latest weekend auction results.
The bit I'm excited for, Doc. I've been waiting for this.
What? Oh, really? Okay. Well, we do, because it does tell us what's happening from weekend to weekend. That's why we do focus a lot on those auction results of the weekend. And, that's because, it is a reliable forward indicator of what's happening generally in the market. And if you want to know with real data what's occurring on a week-to-week basis, then it's good to catch up with those weekend auction results. And I'll show you how to get those when we get to the end of the data. So steady late winter results, relatively steady. We haven't seen a real fade out in the winter market this year. Again, another sign of how resilient our housing markets have been. We're still seeing good auction numbers, in fact, record auction numbers for winter in most of our markets. So sellers are quite happy to be engaged, and clearance rates have stood up as well. We usually have a distracted market through July and into August because there's a lot of holidays going on. People tend to have made a decision through the autumn period, and they're those that haven't are sort of sitting around thinking, hey, what are we going to do? We're going to get a new place by the end of the year. So it's those middle of the year decisions that create the spring selling season, because people think, yeah, let's get it all done, but let's make sure we get it done by the end of the year. So we see that revival in activity, which is called the spring selling season. It's not really got much to do with the weather, to be quite honest, because if you're looking to buy a house, I'm not sure you're discouraged by rain, hail, or sleet, or snow, or anything like that. You'll still get out there and secure it. So steady results, but we did see a bit of a surge in auction numbers on a weekend-to-weekend basis, and maybe that's an early sign that we are approaching that spring selling season with more sellers coming into the market. But there certainly has remained positive overall, the results at the weekend, despite those higher listings, which, as I said, are beckoning perhaps the onset of the spring selling season. And of course, we had Reserve Bank announced last week that interest rates would remain on hold. So I guess that's a steady as she goes environment for interest rates is also a positive for a steady as she goes environment for the housing market. So let's have a look at these results. In Sydney, we had 686 auctions. That was a big rise from the previous weekend. Early sign of spring, sellers coming back into the market. 686. In fact, we've only really had a couple of weaker weekends for Sydney auctions, and around about where they were the same time last year, Sydney, which is sort of breaking the trend where we've seen on that annual comparison listings have been well ahead of it at the same time last year. Another reasonable result there for Sydney. Sydney's moved back a little bit over the last couple of weekends with clearance rates under 70%. We've been above 70% for quite some time in Sydney. Again, just perhaps not the same demand at the moment, but I expect to see, as well as listings rising, those clearance rates rising in Sydney. Of course, clearance rates are still well below where they were in Sydney a year ago, because that was a very strong market environment with that reviving housing market. pushing up prices, pushing up clearance rates. Melbourne had a big shift in auctions as well as Sydney, up by nearly 100 auctions over the weekend. And the Melbourne clearance rate has been holding quite firmly, really over the last month or so. It's sort of still a seller's market in Melbourne, those sort of mid to higher 60 results. But the Melbourne market's a bit of a fragmented market at the moment, which is what you see during winter anyway. But it's been like that for a while, Melbourne. It's really about the mid and lower priced properties, price points, suburbs in Melbourne that continue to perform pretty well. It's really the higher priced suburbs, the higher priced market, the prestige market, which has been dragging the chain in Melbourne. And that's the missing link from a Melbourne revival at the moment. But we typically see that happening in the spring market because you get a much higher proportion of higher priced properties coming into spring, because those obviously in those higher priced areas tend to be more taking winter holidays, etc. So are distracted. But last weekend, when we looked at the regional breakdowns, Melbourne's inner east was an underperformer again, and that's sort of typical for winter. But again, we've seen that the prestige inner suburbs of Melbourne underperforming over the last couple of years, and I think that's the clear reason why Melbourne hasn't recorded the same results as the other capitals, or one of the reasons it hasn't. But still 66.9%, good result, higher than the weekend before despite higher numbers. And auction numbers, as we've seen in Melbourne for most of this year, significantly higher than the same weekend last year. Clearance rates lower, but again, that was a strong period in the reviving market. Brisbane auctions down a little bit over the weekend. Clearance rate also down, but the Brisbane clearance rate, anything over 50% is usually a positive for that Brisbane market, because it tends to have its own culture in terms of auctions. It's a different marketing environment, the marketing auction environment in Brisbane. And the clearance rate's similar to Melbourne and Sydney, down a little bit over the year as well. Adelaide was a little bit of a spring feel in Adelaide, because even though auction numbers were down slightly, it was back to the 80% plus results that we've been so used to Adelaide over the past year. It's been softened up a little bit over the last month or two, Adelaide, but back to an 80% result, which is similar to what we saw a year ago. And again, listing numbers higher than a year ago in Adelaide. And Canberra, we've been sort of talking up that Canberra market for a while. Its auction numbers a little bit higher, similar to the weekend before, but another 60% clearance rate in Canberra. We thought maybe the reviving Canberra market had just taken a bit of a sideways movement over about a month ago, because it started to shift downwards from those 60% results. But gee, it's been back in town over the last couple of weekends. 69% is the highest we've seen in Canberra for a while. So, and not far away from where it was a year ago. So maybe we are starting to see a consolidation of a revival in that Canberra market, which really was an underperformer over the second half of last year, when it sort of disengaged from the Sydney market, where it usually tracks pretty solidly. So, I think there's some early signs there of spring there. I would expect to see more signs coming weekend, so look out for that. And still, I'd suggest overall, markets that are favouring sellers, really across the board. And as I said, even the Melbourne market, which has been the underperformer to some degree, marginally, I think is being dragged down by a sort of a fragmented market, rather than a market that's, consistently weak across the board. So these are the trends. Sydney down a little bit so far over August compared to July. Maybe the winter effect there is revealed in the Sydney trend. Melbourne's still holding up. In fact, Melbourne's, its highest clearance rate so far this month for 6 months. So some better news there for market. Melbourne market certainly holding up. Brisbane again is on the rise over August so far. And as I said, those Brisbane results, typically anything over 50% is a positive for the Brisbane market for prices growth. Adelaide back in town, they're still not averaging 80%, but or overall 80% clearance rate over the first 2 weekends of the month, but certainly heading upwards again back into that 80% territory early signs of spring in that Adelaide market. And Canberra, hey, look at Canberra. Whoa, it's got its highest clearance rate for some time. In fact, it's higher than where it was a year ago. So, gee whiz, is Canberra really on the march? Well, let's wait and see.
It's doing well.
But well, we'll say I told you so when it is finally confirmed, hopefully in a couple of weekends' time. So if you're looking for those auction clearance rates of a Saturday, hot off the press, go to my LinkedIn site, Doc Andrew Wilson at LinkedIn, and we release the headline results at around 6:30, and then we have the full national report Sundays on my LinkedIn channel. Around about 9 o'clock in the morning. That includes the regional breakdowns for Melbourne and Sydney and the top 10 sales in each of the capital cities on the Sunday. So LinkedIn site, Doc Andrew Wilson. So it is a very good forward indicator of what's happening in your housing markets. If you want to get a copy of the latest national auction market report, there's the QR code. Take a quick snap of that, and I'll give you a link to a PDF file of that latest scenario. Just finishing off now, Lachlan, as we usually do, let's have a plug for the My Housing Market Infinity Suburb Data app. So if you're looking for real-time data on a suburb basis, you can take that QR code and we'll take you a picture of that. We'll take you to the app or the link. It is managed through Infinity, our good friends at Infinity. So I'm just letting you know, you've got to get a password from Infinity to activate that great little app. It's a real-time app. It's every suburb in Australia that has data. Here's a screenshot. You can filter it for price or rent. You can filter it for states or regions. That's the capital city region or the outside capital city region of each state. You can filter it for all the suburbs. You can also filter it for the type of property, house unit or townhouse, and for the number of beds. And there's a screenshot of Blacktown that we've used as a model on our app. Great little app to put on your phone, and you can just search suburbs at your heart's content, and not just the median price. These are asking prices. So this is what the market's asking at the moment for property. We also have the high price and the low price from the data and the number of properties currently listed. And you can do exactly the same thing for the rental market as well. So get a hold of that one. And we're always on the improve for that app. So we're going to have some more data as part of that Infinity My Housing Market service to the marketplace. Next week, we've got the labour market. What's happening with unemployment? Is it rising? Is it falling? What does it mean for interest rates? We've also got house building costs that we're going to look at, which has been an improvement. But is it still improving the high cost of building a house? We'll look at the latest My Housing Market House Building Index for June, and also, as usual, the latest weekend auction results. So if you want to have a copy of this week's report, there's the QR code for that. And that's all from me, Lachlan. So it's been a great show.
Yeah, mate, that was fantastic, Doc.
And we'll leave it all till next week for another thrill-packed episode of the Wilson Weekly.
Absolutely. Thank you so much, Doc. Really appreciate that.
That's my pleasure. And we'll all be looking forward to getting together with the Infinity crew at the weekend on the Gold Coast.
Yeah, absolutely. I'll see you there.